In the energy quadrant, taking a look at 2 straight days of higher prices for WTI crude oil futures. The December futures shot above $72 a barrel in the second consecutive session. The high today, 72.09, that was up 2.93%. The low, 69.35, that was down almost a full 1%. And as we get in toward the close, we're still up right around 2.5%. So we're finishing nearer to the highs than to the lows. Crude oil still is below major moving average resistance level and has got quite a bit of work to do to consider itself out of the short-term downtrend that it's been in since early July, the cycle highs we had in early July, and really out of the long-term downtrend has been in since about the middle of 2023. Chinese demand could be part of the rally that we got today. News released by the Commerce Ministry of China through Reuters declared an increase in the import quota for Chinese private refiners. This directly coincides with Russia's crude oil exports hitting 4-month highs. So that could be the end of the story, or it could be that China either senses or sees a recovery in commodity demand, which would be bullish for commodities. That includes, of course, crude oil. Looking at the demand in India, it's been steady, and the demand in the US has been steady to slightly lower. So if we see an increase in demand coming out of China, that obviously would be at least put a floor in crude oil, if not extend the move higher. We also have the API report due out tomorrow. That's the report from the American Petroleum Institute, and it's only looking for a build of about 700,000 barrels. That's after a pretty large draw last week. So we'll be keeping an eye on that. That is always a decent indicator of what may happen in the EIA report the following day, although they're not correlated in terms of raw numbers. But if we get a big beat in API, we often get a big beat in the same direction in EIA. Just the numbers are pretty much off, so we'll keep an eye on that tomorrow.